Imagine a world, not so far in the future, where the financial landscape looks nothing like what we know today. Picture a reality where the US dollar is no longer the undisputed king of global finance, its dominance quietly slipping away. It's the year 2035. In a move that shocks markets, Saudi Arabia and China finalize a massive oil deal, but this time the transaction is settled in digital yuan, not in dollars as it had been for decades. Meanwhile, Brazil exports soybeans to India, and the payment flows in rupees, bypassing the dollar entirely, a new pattern emerging in world trade. Behind closed doors, central banks are quietly diversifying, shifting their reserves away from US Treasury bonds and into a mix of other currencies and gold, hedging against uncertainty. This isn't a science fiction scenario, it's a future that many nations are actively working toward, a process known as de-dollarization. Beneath today's headlines, a fundamental battle is quietly raging for control over the world's financial plumbing, the systems and networks that keep money flowing across borders. For generations, the dollar has been the lifeblood of global trade, the currency everyone trusts in times of crisis, and the backbone of international finance. This exorbitant privilege has given America immense leverage, the ability to borrow cheaply, impose powerful sanctions, and influence the world economy. But what happens as that privilege begins to fade? From Beijing to Brasilia, leaders are searching for alternatives, determined to reduce their dependence on the dollar. Many see the dollar not just as a currency, but as a tool of US coercion and a source of global instability, fueling resentment and calls for change. Recent waves of sanctions against countries like Russia and Iran have only accelerated this global push to find alternatives. Why, they ask, should their economies be so vulnerable to decisions made in Washington, D.C.? History reminds us that no currency reigns forever. The British pound and Dutch guilder once held this throne, only to be replaced as the world changed. These seismic shifts don't happen overnight, but today, we're witnessing the first tremors of another historic transformation in global finance. The search for a new global currency order has officially begun, and the outcome will shape the world for generations to come. To truly understand the concept of de-dollarization, we first need to grasp the full extent of the dollar's dominance in the global economy. The US dollar isn't just another currency, it's the backbone of international finance, trade, and investment. Think of it as the world's default operating system. Nearly 90% of all foreign exchange transactions involve the dollar, making it the most traded currency by far. More than half of global trade is invoiced in dollars, regardless of whether the US is directly involved. And nearly 60% of central bank reserves worldwide are held in dollars, reflecting deep trust in its stability. This creates a constant, almost insatiable demand for US assets, especially treasury bonds, which are considered the world's safest investment and a haven during crises. Thanks to this unique position, the US can borrow at lower costs, run persistent deficits, and still enjoy low interest rates, a privilege no other country possesses at this scale. Washington also wields immense geopolitical power. By controlling access to dollars, it can impose financial sanctions that can cripple adversaries or influence global events. The dollar's supremacy is self-reinforcing. Its unmatched liquidity and vast network effect make it ever more attractive, drawing in even more users and investors. In essence, everyone uses the dollar because everyone else does. It's a cycle that's hard to break. For any challenger, it's not enough to simply be stable and reliable. They must overcome this deeply entrenched network and convince the world to change its habits. The global financial system, from payments to contracts, loans to reserves, is fundamentally built around the dollar, making it the default choice for countless transactions. Switching to another currency isn't just a technical change, it's a massive, risky undertaking that could disrupt global markets and business confidence. The dollar's dominance is about more than economics. It's about trust, habit, and the global infrastructure that's been built up over decades. Any rival currency must offer not just stability but also the scale, credibility, and deep liquidity that the dollar provides. That's a high bar, one that's been built up over 70 years of history, policy, and global cooperation. The dollar's reign is deeply rooted in the world's financial DNA, shaping the very structure of international commerce. For any challenger, the task ahead is daunting, overcoming not just economic barriers but decades of trust and habit embedded in the global system. The dollar's supremacy was forged by a unique blend of history, strategy, and circumstance. Its rise to dominance wasn't inevitable but the result of pivotal choices and global events that shaped the modern financial world. In 1944, World leaders gathered at Bretton Woods and agreed to peg global currencies to the US dollar, which itself was anchored to gold. This decision established the dollar as the backbone of international finance. At the time, the United States held the majority of the world's gold reserves, making the dollar the undisputed financial center and a symbol of stability in a war-torn world. This system fueled decades of post-war economic growth and prosperity. But by the late 1960s, U.S. government spending and overseas commitments began to outpace the nation's gold reserves, putting pressure on the system. In 1971, President Nixon made the historic decision to sever the dollar's link to gold, effectively ending the Bretton Woods Agreement and ushering in a new era of floating exchange rates. Many experts predicted the dollar would collapse without gold backing. Instead, something unexpected happened. The dollar's influence only grew stronger. After the 1973 oil crisis, the U.S. struck a crucial deal with Saudi Arabia. Oil would be priced exclusively in dollars, and in return America would provide security and support. Other OPEC nations soon followed, giving rise to the petrodollar system, a new foundation for global finance. Now, every country needed dollars to buy oil, cementing worldwide demand and ensuring the dollar's central role in international trade and energy markets. The fall of the Soviet Union and the rapid expansion of globalization in the 1990s further entrenched the dollar's dominance as more nations joined the global market. Deep liquid U.S. financial markets and unmatched military power made the dollar the natural choice for global trade, investment, and reserves. The dollar's dominance isn't a law of nature. It was built through a series of strategic deals, economic might, and geopolitical power plays. What was built can, in theory, be unbuilt. The system is strong but not unbreakable. The story of the dollar is one of constant adaptation, resilience, and leverage in the face of shifting global dynamics. Its future will depend on whether other nations can unite to rewrite the rules, or if the dollar will continue to adapt and maintain its place at the heart of the world economy. The challenge to the dollar is now led by a determined bloc, China and Russia at the forefront. For them, de-dollarization is strategic. U.S. sanctions have shown the risks of dollar dependence. Russia now trades with China almost entirely in yuan and rubles, and has shifted reserves to gold and yuan. China promotes the yuan globally, building payment systems and swap lines as alternatives to Western networks. The BRICS group, Brazil, Russia, India, China, South Africa, and new members, pushes for trade in local currencies. India and the UAE settle trade in rupees and dirhams. Brazil and China bypass the dollar in bilateral deals. BRICS is even exploring a common currency, though practical hurdles remain. These moves are small but coordinated, the first real effort to build an alternative system. The goal: reduce vulnerability to U.S. power and create a more balanced financial order. If the dollar's role shrinks, the global balance of power shifts. The U.S. would lose its exorbitant privilege, borrowing costs would rise, and sanctions would lose bite. Higher interest rates could force tough choices on spending and taxes. America's geopolitical leverage would diminish, making diplomacy and military power more important. For challengers like China and Russia, de-dollarization means more economic sovereignty, but the transition could be rocky. Multiple currency blocks could make trade riskier and fragment the global economy. The current dollar system, for all its flaws, has provided stability and growth. A rapid shift could trigger financial crises. Even a slow transition would require new rules and institutions. The world would enter uncharted territory with both risks and opportunities. The stakes are high for every nation and for the global economy itself. The outcome will shape the next era of globalization. Despite the noise, the dollar's position remains secure. U.S. financial markets are unmatched in size, depth, and trust. Treasury bonds are the world's safe asset. No rival market is as large or reliable. The U.S. system's transparency and rule of law inspire global confidence. The dollar's network effect is massive. The world's financial architecture is built around it. Switching systems would be costly and disruptive. Most prefer the status quo. Alternatives like the euro and yuan have major weaknesses: political fragmentation and capital controls. The dollar remains the cleanest shirt in the dirty laundry. Until a credible rival emerges, the world sticks with the dollar, out of necessity, not love. Its reign continues by default. De-dollarization faces steep obstacles. The yuan's biggest hurdle: China's capital controls and lack of currency openness. Global investors need free access and trust. China's tight grip makes the yuan unattractive as a reserve. For the yuan to rise, Beijing would need sweeping reforms and to cede control. Unlikely for now. The BRICS currency idea faces even bigger challenges: diverse economies, political rivalries, and no shared central bank. Without deep union, a BRICS currency lacks credibility. Internal divisions, especially between China and India, make unity difficult. The desire for an alternative is strong, but practical solutions are elusive. A sudden dollar collapse is unlikely. The system is too entrenched, the alternatives too weak. The most probable future is gradual. The dollar's dominance erodes, but it remains first among equals. We're moving toward a multipolar currency world: dollar, euro, and yuan, each with their own spheres. Bilateral trade deals and rising yuan reserves are early signs of this shift. The dollar's share will decline, but not disappear. America's privilege will shrink, but its influence will endure. This transition will define 21st century geopolitics: slow, complex, and shaped by growth, technology, and politics. The key question: how fast and how smoothly will this change unfold? For U.S. policymakers, the challenge is to adapt without provoking instability. The new global order is taking shape, one step at a time. The big question: will one currency rule, or will we see many? A single successor is unlikely. China would need radical reforms to make the yuan truly global. The more plausible future is multipolarity: dollar, euro, and yuan as the main pillars, with others playing regional roles. This could mean more balance, but also more complexity and friction in global trade. The outcome will affect everyone, from the price of goods to the cost of loans. The shift away from dollar dominance is a tectonic change, still unfolding. The world is at a crossroads, and the choices made now will shape the next era. Are we witnessing the twilight of the dollar, or just the beginning of a new chapter? The answer is still being written.